Alright guys, so in this section of the course, I'll be going over my personal specific game plan and what my analysis is every single day coming into the markets from the higher time frames to the lower time frames. I like to do a top-down analysis. Like I mentioned, despite yes, we are day trading, we still want to see the bigger time frame picture because this will tell us where price is going to head, right? We don't want to just be scalping a 5-minute not knowing where price is eventually going to head. So we need to have some sort of bias, or in terms of directional bias, understanding where the market is going to head and facilitate trade. So what I'd like to do is, this works on any asset, by the way. It doesn't matter what you're trading, but mainly Forex and stocks. Okay. So of course, crypto is a little different, honestly, the way it's heading, because there's more fundamental, I guess, in terms of crypto. Crypto also is pretty manipulative at times. So I don't really trade crypto anymore. But anyway, point is, I like to start off always on the daily time frame. And what I like to do is have a top-down analysis, but only recent price action, right? I don't want to be looking at weekly time frames, seeing where price is, because yes, on the weekly we are extremely bearish or extremely bullish, but it doesn't matter to the current time frame. Why? Because we are currently trading in a single day. We're taking day trades or scalping within the trade day, not even holding the whole position the whole day. So this recent price action matters a lot more to us than the high weekly time frame, for example. So what I like to see is on the daily time frame, I like to just gauge roughly where we're heading in terms of price. For me, this looks like we are in a bearish state currently, okay, off this push up leg. Okay, we are potentially making just another leg down, as you guys can see. So on the daily, I am having a bearish mindset because I see price making lower highs and lower lows. Of course, market structure is extremely important. Going on the 4-hour, we roughly see the exact same thing. We have broken the structure here, right here, and we have pushed down. Now we're potentially pushing up and then making another leg down. That is what I see, and let me tell you guys why I see that. So let me get rid of this real quick. Okay, why I see that? Because on a 1-hour, if we go on the 1-hour, we have an imbalance here. Now, before I get into the imbalance, I want to let you guys know two things that you need to be looking for when you're on the higher time frame. You need to be looking for directional bias, what the trend is on the higher time frame, that's recent price action relevant, and we need to see where price is position wise. This is extremely important. Why? Because let's say we are up here, we're trading right here. Okay, let's say we don't see any of this right here. We just see price being extremely bullish, right? Of course, price is extremely bullish. We've broken structure to the upside, lower, higher highs, higher lows. But what you don't notice is we should be bearish here. Why? Because look at the past few zones over here. We have been inside a major key zone right here on the higher time frame. Okay, so on the higher time frame, you guys can see every time prices come up here, we have rejected extremely hard to the downside. This is what eventually led to this big push down. Okay, this is a really big drop, especially on the 4-hour time frame. This is a massive drop. So this is something we need to keep in mind. Where in terms of the zones or price is price at? We are not bullish here because we know in higher time frame this is actually an extremely bearish zone. So we should actually have a bearish mindset coming into this day. So that is something you definitely want to take into consideration, where price is position wise. Usually though, within like the middle, the position doesn't matter as much. For example, like right here, price, this zone doesn't, this is more like a gap zone right here, because price usually just completely, goes straight through this. So this is more so a gap zone that I consider. But zones like these, where there's very heavy price action within this high time frame range, is something you want to be looking for. Aside from that, these other zones that are in the middle between these two big major zones, you don't have to worry too much about them in terms of position. But you definitely should be worrying about position when it's on a higher quality zone, like the one I mentioned above. So now that we've identified where price is position wise, as well as the directional bias, which we are bearish, we're going to be looking for imbalances. So what are imbalances? Fair value gaps. I mentioned that in my previous videos. You guys can check it out if you guys forgot what they are, but basically these imbalances right here. So this is a big imbalance right here, as you guys can see in price. What does this imbalance tell us? Well, this tells us at some point, it doesn't matter what price does here, at some point we're going to fill this imbalance. And after we fill this imbalance, I see a major rejection. Why? We first rejected this very high time frame major zone right here, and we already have a bearish market structure. So we're most likely going to be coming back down, doing whatever here, and then creating another new low. So we are extremely bearish on the day. However, because we have this imbalance above, we are potentially bullish for a moment. After we fill this imbalance, I'm extremely bearish. Okay. Now, sometimes we don't even fill this imbalance until later on, as then later on, as then we come all the way back down there and then we come back to fill this imbalance. So these imbalances, the only thing is you just don't know when they will get filled. But the higher the time frame, the longer it takes to fill these imbalances. So for example, imbalance on 5 minute takes much quicker time to fill than a hourly imbalance or daily, weekly imbalance, right? We don't want to be good looking at weekly imbalances because it's going to take much longer to fill, and it doesn't matter to current price action, especially if you're scalping a 5 minute trade, unless you see major momentum going that way. So right now, currently where price is sitting at, I am looking potentially to go bullish if price shows me that it has bullish momentum. If it doesn't, we are bearish. So that's what I see on gold currently on Friday, 28th of July. So once we have identified the trend, okay, let me write this out actually for you guys. Once we have identified the trend, okay, the high time frame trend, then we identify high time frame imbalances, and next thing we want to identify is high time frame liquidity areas, okay? So this is extremely important. Why? Because liquidity and imbalances tell us where the market is going to head. And the reason why is because the market is there to facilitate trade. Yes, there are, of course, manipulations within the market to get banks and stuff to get their orders filled. But the main thing that drives price, of course, is these imbalances in liquidity, because price needs to reach these areas for institutions to fill their orders and such. So basically, we want to be marking out liquidity imbalances after we find the high time frame trend and where the position, right? High time trend and position. Let me write that down real quick as well. High time frame trend and position. So for these liquidity, we want to be marking these out because this is where price is going to be head. So right here, I already had liquidity marked out over here. We swept it and then we pushed down. But we want to be sweeping or picking new liquidity areas that actually matter to where price is currently, right? For example, let's see how much this is. This is a 1% pump, which gold can definitely pump 1% within a single day. I think it's mostly going to pump honestly from here before dropping down, unless we have insanely strong momentum breaking highs, but most likely not going to happen. So what I like to do is draw out liquidity on the higher time frame. So there's a trick actually for liquidity. So what you can do is once you take your ray tool, what you can do is if you hold control on your keyboard, on Windows especially, you can make it very specific to these points. So you guys can see it has a magnet mode on the left side corner of my screen. This way you can have these precise entries, okay, or precise positioning of your liquidity. You really want to position these as precise as possible, especially in a higher time frame when you scale down lower, because a tiny liquidity sweep is considered a liquidity sweep. Okay, so right here, what you want to do now is you want to hold shift on your keyboard. This makes the line actually completely straight, which is what we need exactly. And there's that. And then you can mark this out as your liquidity. Okay, I already went over how you identify liquidity, so you guys should already know that from the previous sections. But once you identify a high time from liquidity, we have liquidity standing up here. We also have some liquidity standing here. Now, when there's two areas of liquidity here, what I like to do is I like to play how price reacts. So rather than just playing straight off a liquidity sweep, I want to see like a break of structure to the downside, okay, or upside. And it also needs to see more confirmation like displacement, things like that, a strong push after sweeping. So when I have two areas of liquidity really close to each other, I like to wait for more confirmation. If there's only one liquidity, I like to typically get in as soon as possible once you sweep liquidity. But again, a lot of that comes with intuition, market experience. You need to understand the asset you're trading and how liquid and how it moves after sweeping liquidity. So once you have those high time frame liquidity marked out, I do see we have more liquidity down here, right? So right here we have some liquidity up here potentially pushing up. There wasn't that big of a push from this candle, as you can see, so I don't really mark that. What I like to do with liquidity sweeps is once you identify the extreme liquidity sweeps, liquidity areas, you want to drop down in the lower time frame, like the 30-minute. And essentially here, you want to be just marking out more specific liquidity. So let me drop down to the 30-minute. 30-minute or 1 hour actually works well for this. Doesn't matter too much. 30-minute, 1 hour works fine. You see, we have major liquidity right here. This is the start of the move. You want to try to make our liquidity areas as high probability as possible. This is the start of the move. We have liquidity resting right there. And what do we see? Well, we see even more liquidity right here, okay? We have massive liquidity area right here. Now, when there's tons of liquidity, like right here, like basically right here, as you can see multiple areas of liquidity, I like to draw it with a box sometimes, or draw either with a box or just multiple liquidity areas, just because any of these areas of liquidity could be swept and is considered a liquidity sweep. You don't want to be missing the moves either, so I like to, draw a few just in case to see how price reacts once it sweeps. And then we have more liquidity down here, but me personally, Actually, gold can do definitely 1% move. Um, these areas of liquidity I could draw out, but for me currently, I am not going to draw them out until they are somewhat close to being relevant, right? So I'm not going to draw those out, but these are my areas of liquidity so far. And okay, right here, we also see major liquidity right here. This is extremely important area of liquidity. Why? Because if price really wants momentum to fill this gap, you see 30-minute above, we're going to have to sweep liquidity there. And honestly, that liquidity might hold or might not hold, right? Either pump straight through. Most likely that's what's going to happen, especially when you have a big gap right here on the high time frame. It's mostly going to pump straight through. But what we can potentially see in the case scenario 2 is we sweep liquidity, come back down here, sweep this liquidity, even potentially coming back down here, taking this liquidity, and then we fill that imbalance. Okay, so this is what combining liquidity with the high time frame, position, and trend, as well as imbalances, tell us about the overall picture and story. Again, this works on literally anything you can trade, aside from crypto. It does work, but crypto's the way crypto moves in terms of liquidity sweeps, I'm not a fan because it just sometimes sweeps multiple times and you just get stopped out multiple times. This is not the best in my opinion when it comes to trading. So yeah, there's that. Essentially, once I mark out those areas of liquidity on the high time frame, right? On the high time frame, I then go down to the 5-minute. This is where I mainly analyze my day trades. Now that we know we have a bearish mindset, but we might potentially pump up. We have a big imbalance right above. So there is most likely a potential we pump up, right? So I want to see how in trade how price presents itself with new data and information that comes out based on these candlesticks. Okay. So once we have that bias, we know where liquidity resides in this range up here and down here, and potentially your price comes all the way down here. I mean, there is potential. We then want to know, well, when are we going to enter, right? Things like that. Now, when it comes to entries, yes, you can mark out zones on the lower time frame to get precise entries. For example, I wouldn't really say this is a zone right here. This is very weak, not big of a reaction right there. This place is really iffy, honestly, where price is and how price moves. This is awful price action. I don't like trading when there's awful price action like this. It just makes it very unclear where the real buyers and sellers are. So I would personally not even play demand. I would probably play supply over here because it's a lot more prevalent, of course, a lot more open and just obvious. So I would most likely be playing supply, but only issue is we have an imbalance above. So we will see how supply reacts here. We need confirmation, and there is that. So of course, another thing is though, we do have, I wouldn't even say this is an imbalance. This is extremely weird price action. So I'm just gonna ignore that. But once you depend on, again, this is all depends on your trading strategy. Once you go in the lower time frames, the higher time frames typically is one thing that everyone analyzes. Once you analyze a high time frame, you want to go down to your lower time frame. So lower time frame, we can see we have a supply zone here. Okay, we have a supply zone right here. So I'm looking to potentially play shorts. If price comes up here, it gives me a good reaction with confirmation. We play to the downside and targeting obviously opposing liquidity or imbalances or key levels. Those are my 3 targets I mainly utilize. The opposing liquidity is my final TP most of the times. Most of the times price doesn't reach the opposing liquidity. It really depends on the higher time frame trend. Obviously, from what I've noticed, the first move of New York session is always the biggest. So most of the times we don't target opposing liquidity. We never reach opposing liquidity of the start of the first move. The first move is always the biggest. Then it comes to somewhat of a smaller second move, and then we have a solid big move on the third leg. So there's that. So once we have identified that, we then want to be knowing where we're going to enter, right? So once we, of course, have our supply zone, we know our entry confirmations. We then want to wait until price comes up here, gives us a signal, and then we can go short. And then, of course, opposing liquidity, for example, would be, if you guys don't know, we can target this opposing liquidity right here. This is the most relevant opposing liquidity. We also have liquidity right here, and then we have a liquidity down here. So it really depends on how price reacts and how much momentum we have, right? We want to be reading live price action. So if there's minimal momentum going to the downside, it's very, very choppy, things like that. Or when it's consolidating, it may not mean it has no momentum. It's just collecting more orders to have a big move. So usually when it consolidates, there's going to be a big move either in either direction. We have no clue which direction, okay? So again, there is that. So that's basically be it for this video. Of course, you can find these imbalances on the lower time frame as well, but they don't mean as much. Why? Because we have so many imbalances on a lower time frame. You guys can see this is the 5-minute, and we have so many of these imbalances. You have no clue where price will react. Will price react to this imbalance right here, with giving us a nice rejection, or will price react to this imbalance or this imbalance, or will prices break through all these imbalances? So it really depends, but that's going to be it for this video. And I'll see you guys in the next section.